The Debt Ceiling Dilemma, a deep dive into the 14th Amendment and its implications for the U.S. economy. As the United States faces the possibility of defaulting on its debt, the Biden administration is considering challenging the constitutionality of the debt limit. Proponents of this approach argue that the 14th Amendment mandates the government to continue issuing new debt to pay its obligations, even if Congress fails to raise the limit. This analysis examines the legal basis of invoking the 14th Amendment and the potential economic implications of such a move. The 14th Amendment and the U.S. debt ceiling. The crux of the debate lies in the interpretation of the 14th Amendment, which states that the validity of the public debt of the United States shall not be questioned. Advocates argue that this clause overrides the statutory borrowing limit that currently caps federal debt at $31.4 trillion and requires congressional approval to raise or lift. They claim that in the event of a debt ceiling impasse, the 14th Amendment permits the government to issue new debt to meet its obligations, such as paying bondholders, Social Security recipients, and government employees. Legal debate and historical context. Legal scholars and constitutional experts are divided on the merits of using the 14th Amendment to bypass the debt ceiling. While some support this interpretation, others argue that the amendment was intended to address specific issues of the post-Civil War era and not to override the statutory borrowing limit set by Congress. No previous administration has adopted this constitutional challenge, and the Supreme Court has not ruled on this issue, leaving its legality uncertain. Potential economic implications. If the Biden administration were to invoke the 14th Amendment, several economic consequences could arise. 1. Short-term market volatility. Investors may perceive the move as a sign of political dysfunction and question the creditworthiness of the U.S. government, leading to a sell-off in financial markets and increased borrowing costs. 2. Legal challenges. Republicans would likely challenge the constitutionality of bypassing the debt limit, potentially leading to a protracted legal battle that reaches the Supreme Court. This uncertainty could further exacerbate market volatility and increase borrowing costs in the short term. 3. Long-term economic gains. If the courts uphold the 14th Amendment's use in this context, it could eliminate the threat of future debt ceiling standoffs and promote long-term fiscal stability. Economist Mark Zandi's analysis suggests that while there would be short-term economic damage, the economy would avoid a recession and rebound quickly if the courts validate this interpretation. 4. Policy and political repercussions. A successful challenge to the debt ceiling could reshape the dynamics of fiscal policy negotiations between the executive branch and Congress. However, it may also deepen partisan divisions and create lasting political tensions. Conclusion. The idea of invoking the 14th Amendment to address the debt ceiling crisis presents a complex legal and economic quandary. While it could provide a means to prevent an economically damaging default, the short-term market turbulence and potential legal challenges cannot be ignored. As the U.S. inches closer to a possible default, it remains to be seen whether the Biden administration will choose this path or find a compromise with Congress to avert a crisis.